Well, joining us now, Rockefeller International Chairman Ruchir Sharma. Ruchir, it's great to have you back on the show, and I want to start right there with you because this has been part of the Chinese playbook for many years now to build up industries and then flood the market, the global market, with those exports, particularly when they've reached capacity, if you will, within their own domestic market. Whether it's EVs, whether it's some of these other types of green technologies that the White House is currently very focused on, as well as, I might add, Europe when it comes to EVs. How does this play out? How does this speak to this new geopolitical environment we find ourselves operating in?
Well, it's clearly unsustainable. Firstly, this traditional model of exporting your way to prosperity is something that works for smaller nations or nations at the early stages of their economic development. It's not something that's going to work for China. Undoubtedly, this year, last few months, exports have been a very important prop for the Chinese economy because the domestic investment and even the consumption side of the economy has been very weak. But I think that's reaching its limits now. You're seeing the reaction. And as you pointed out, this is not just the United States, even places like Europe that tend to be less hawkish on China are also reacting to this. So the strategy of exporting your way to prosperity is not going to work for China. It's hitting its natural limits. And I think there'll be a back to as to what's going to happen on the domestic Chinese economy. And even Janet Yellen being there, the markets haven't really paid much attention to it, if you notice. And that's because they realize that this is going to be a constant threat now, the imposition of tariffs or pushing back against China. And Janet Yellen is supposed to be one of the less hawkish persons as far as the White House and the U.S. administration is currently concerned.
Investors do seem to be focused on some of the other markets that are beginning to reap the benefits of supply chain diversification and companies thinking about setting up manufacturing hubs above and beyond China as well. India being a key example. I know that's a market and a country you're focused on as we do come into an election there.
Yeah, I think that, there are so many countries out there which are in fact benefiting from this ABC policy of anything but China. India is one of them, obviously. You have Vietnam, Indonesia, Mexico has been the big conduit, both for China and for other companies right across our border. So I think that's really been the play. As far as China is concerned, it's too large an economy to ignore, so we can't completely shut it out of the investment case. It's still got the second largest economy in the world and the second largest combined market cap if you include China and Hong Kong together. So can't ignore that. But really, the world has moved on. The emerging markets have moved on. Everyone's looking for investment opportunities outside, and they're finding that there are plenty of those. The pace of outsourcing, reshoring, all that continues. And the impact of China slowly deflating its way has been much less severe than what people would have expected. 3 or 4 years ago, had you told anyone that, listen, the Chinese economy is going to be in such trouble, what do you expect the impact to be on other markets? You have expected a much more negative reaction. In fact, we have had a fair amount of resilience across emerging markets, and even the commodity markets have been pretty well bid, given the supply issues there in the face of all the weakness we've seen in China.
So does that mean, and we've had folks that have come on the air and made this case, that emerging markets look compelling as an investment right now, but you have to think about them ex-China?
But I think that we still have to think of emerging markets in terms of geographically which countries you want to be in. And I'm not in big favor of these EM ex-China strategies either, because if China, like as I said, it's too big a market to ignore. And that's really giving up the responsibility back to the investment plan, whoever, and abdicating that responsibility. I think it should be very much an active fund manager's duty to figure out what to do with China in an emerging market construct, and to figure out that, listen, are there opportunities in China? And there will be opportunities in China. So I think that these strategies which have become fashionable are unlikely to last too long. One is EMX China. The second is, or people talking about India becoming an independent asset class. And I've just been around this block too much, maybe seen emerging markets for the last 3 decades, to know that to have very firm views on one country, positive or negative, never really works. These are waves, they come and go, these ebbs and flows, and every 5 to 10 years this changes. 5 years ago, in every company meeting in the US, the only question people would want to ask is, what's your China strategy? Now that's gone. And now they're trying to prop India up in a similar way. I'm a big fan of India. and we have always invested in India, but I would advise against concentrating any strategy too heavily in favor of one country. And there are a smattering of countries out there which I think offer opportunities, some of which I mentioned. And I think that it's even beyond the mainstream emerging markets, some of the frontier markets like Argentina, Kenya, Nigeria. These countries are also turning around just because they have no choice. They've been carrying out significant economic reforms over the last few months.